Good evening, everyone. Hi, I'm Nassau County Legislator Arnie Drucker, and I thank you for joining me tonight as we learn how to file for a property tax exemption. This program will focus on the basic STAR, enhanced STAR, and senior citizen real property tax exemptions, and is intended for senior citizens and caregivers. I am privileged this evening to be joined by our panelists, Joe Mazza and Alana Rosenstein. Joe Mazza is an experienced financial counselor with Family and Children's Association of Long Island, where he has worked for over 12 years. Joe also offers his time as volunteer income tax instructor. Tonight's program would not be possible without Joe and his time and efforts in preparing a thorough and informative presentation. Thank you, Joe, for your generosity in sharing your time and talents.
You're welcome.
Next, I would like to introduce Alana Rosenstein. As a supervising NORC Director for Aging in Place, NORC Programs for Seniors, Alana Rosenstein works for the Mid-Island-wide JCC, where for the past 6 years, she has overseen state-funded programs that help seniors to age in place in Plainview, Old Bethpage, and Syosset. During the COVID-19 crisis, the Mid-Island-wide JCC has been hard at work, helping seniors connect with resources for food, transportation, healthcare, and other supports. Thank you, Alana, and to the Mid-Island-wide JCC for your partnership and promotion of tonight's workshop.
Thank you so much.
You're welcome. I would also like to share with you this evening an important update regarding a deadline extension for your school tax payments. In order to help cope with the COVID-19 pandemic, Governor Cuomo granted Nassau County a 1-month extension to produce and deliver the 2020-2021 school tax roll to the receiver of taxes. As a result, Nassau County taxpayers should expect to receive their tax bills by the beginning of November, not October. The good news is that taxpayers will have until December 10th to pay their first half school property taxes without penalty. The due date for the payment of first half school tax bills without penalty has been extended by the governor from October 1st to November 1st, with the penalty-free grace period also extended from November 10th to December 10th. If you pay your taxes through your mortgage, you need not take any action. If you pay your taxes directly, look for your school tax bill in early November, not October. Remember, this year you have until December 10th to pay your first half 2020-2021 school tax bill without penalty. The second half school tax date of April 1st, 2021, payable without penalty to May 10th, 2021, at this point remains unchanged. Finally, before we begin the program, I would like to review a few housekeeping rules. First, questions will be answered at the end of the program. If at the end of the presentation you should have questions, please feel free to place your questions into the chat at that time. Only relevant questions will be addressed. Any questions not related to the subject matter of tonight's program can be emailed to me at adrucker@nassaucountiny.gov. This has been a tremendously difficult year for so many residents. I know that topics relating to finances and taxes can be triggering. I ask all participants to frame their questions in a manner that helps to further educate all attendees. And as always, please be respectful. At this point, I turn it over to our esteemed panelists. Joe?
Okay, I'll start off. Unless, Alana, do you have anything before we start?
No, I think we just need the slides up.
Okay. All right, I can see the slides, but we want to go back to page 1. I see I'm on page 16. Let's see.
There you go.
Okay. The slides are on the left-hand side of your screen, so I've clicked mine on page 1, which reads the presentation. Let's go then to the next page. Okay. The first page says we're going to review is when you purchased your home. If you did it before 2015 or much earlier than that, as most people have, then you have probably basic star when you purchased your home. And when you are eligible for enhanced star at age 64, you added that, and the senior star. But if you are a more recent homeowner, purchased after January 2nd, 2015, then you have to contact Albany for your basic and enhanced star. Mineola, the Department of Assessment in Mineola, is not handling basic and enhanced star for those newer homeowners. Not unless they had a home already in Nassau and their basic and enhanced star was transferred from their old home to their new home. But if they're new to Nassau, they have to contact the telephone number for Albany at 518-457-2036. And the reason is because now Albany is saying you have to pay your gross amount of your school tax without reductions, and then you get a rebate check for your basic and enhanced star reductions in the mail, hopefully in October each year. So that's a difference because the people with older homeowners prior to 2015 still get their property tax reduction of basic and enhanced star via a reduction on their school tax bill. So they pay less cash-wise. Now, Albany is allowing people to change, and you'll probably be solicited. I know I've been solicited by Albany to change from the school tax bill reduction method to the annual rebate check from Albany method. That is your choice. You can, but if you make that choice to Albany for a check, it's permanent. You can't go back to the old way where you had a school tax reduction. All right, on to the next slide for enhanced star. Page number 2, if you're looking at, if your page number's on the bottom of the screen. All right, enhanced star, you need, as it says there, one homeowner's age 64 or more, because it's a 1-year lag before it goes in effect. So when your enhanced star actually is in effect and reducing your school tax bill by about $1,500, you would be 65 because it took a year to go in effect. So that's why you apply at age 64. Only one spouse need to be 64. So I could be 64 years old and have a 34-year-old wife, and that's perfectly acceptable. If it's 2 sisters or a sister and a brother, that's acceptable too, as long as one of them is 64 at the time of application. But you cannot have a parent and child. The typical case would be like a mother-daughter as joint owners. That is not acceptable. Your deed would have to be changed. You cannot apply for enhanced star or senior star with a mother-daughter co-owners. But you can do it in a different way if there is a life estate, and we will explain the life estate process later, but that would be the solution to the mother-daughter deed. You would change to mother life, daughter death with life estate so that the mother could live in the house for her life. Your income must be less than $90,550 for enhanced star. The home must be in the name of the senior, or again, senior with life estate provision. It can be in the name of a trust, as long as that trust has a life estate provision. Now, trusts can get pretty lengthy, and when you apply for enhanced star, they don't ask you yet to attach your deed. You are asked about other properties that you may own, whether they're summer homes or rental homes. And that's so that they don't want people getting star reductions in multiple locations. With Enhanced Star, a couple of years back, we added a income verification form, or IVF for the initials. And when you apply for Enhanced Star for the first time, you have to submit and sign the income verification form so that the Department of Assessment can verify your income with New York State income tax. They need your permission to do that. You only have to do that once, but every year thereafter, you have to file an income tax return. Even if a preparer tells you you don't, do not listen to that preparer. They don't understand property tax. Okay, so in order to renew your Enhanced Star every year, you need to file an income tax return with the state of New York. And we suggest both federal and state, of course. So even if you're a Social Security only recipient, it would be best to file an income tax return, even though the rest of the return is zeros. It will save you the difficulty of receiving a delayed request from Albany asking for the same information about your income. So it's best to file an income tax return, and you can get it done for free by various organizations in the community. Hopefully they come back after COVID. Not something new with this year, they've added, you must attach both federal and state income taxes. And if we're filing now today in the fall, we would be filing 2019's income tax because that's the last complete year. So if your income went down because of the coronavirus in 2020, you can't use that lower income until another year has passed because 2020's income tax has not been filed yet. Another new thing they've added to Enhanced Star this year, you must attach all 1099s and W-2s to show where your income came from. Right, that's in addition to your tax return. And they also added the self-prepared return question. If you prepared your return on paper and you hand wrote it, they don't like that, right? They want a return that was computer printed, either by IRS software or TurboTax or some other software program. They really don't want a paper return that you hand write in your amounts on. If you do that, they will require you to get an IRS wage and income transcript to prove that your income is accurate. And on the very bottom of the page, we have the phone number for the IRS where you can request a wage and income printout of all your electronically reported income for the year 2019 on IRS form 4506T. And we have a picture of that at the end of the presentation where you'll get more information on how to request 4506T.
Joe, just to clarify, what you're saying now is for new applicants for STAR, is that correct?
A new applicant for Enhanced Star or a resurrected, I don't know what you want to call it. Let's say that you lost Enhanced Star last year because your income went up one time, maybe because you had a large capital gain, right? And you went over 100,000. And now you want to reapply again because your income went down to 80,000 without the capital gain. You have to now reapply as if you were a new applicant for Enhanced Star. Once you are off or not eligible for a STAR discount, Enhanced or Senior Star, the memory is erased in the computers, and you must reapply as if it were the first time again. All right, so this is really for first timers and first timers coming back. Okay. All right, I think we're ready for the next page, page 3. And it's really a few pages here that we're going to look at just briefly. It's a screenshot picture of an enhanced STAR application form. And of course, you want to print the real form, not this picture here, so that you get it, all on one page. But enhanced STAR will ask you for the names that appear on the deed. It's very important. So if it's husband and a wife, you're going to put both names, or if it's the name of a trust, you put the name of the trust. If you're a husband and wife and only the husband is on the deed, you only put the husband's name as an owner, even though you're married, even though you're going to use your joint income. So if there's one homeowner, like a husband, you're still going to use husband and wife's joint income. And if you're married filing separately, living in the same residence, you're going to still report both incomes. If you're married and separate or divorced, and you can prove that you live in another location, meaning one spouse lives in Queens and another spouse lives in Nassau, and you can show that, then you can just use the income of the homeowner in Nassau on the form to prove that you're eligible based on income. All right, you have to attach some proof of your age. Usually we use driver's licenses. That's the easiest, or a non-driver's license. Proof of primary residence, where you live. Usually we use the tax return because it's required anyway. On the bottom of the page, you have your signatures of the owners. You're going to fill in that. Then we can move on to page 5. Okay, and these are reminders so that you hopefully don't forget something, because otherwise they'll send it back to you, of course. Number 2 reminder, we've already spoken about, that you attach federal and state tax returns and the 1099s and W-2s to prove your income. If there's a trust, they want a copy of the entire trust now, if there's a trust now. So that's another something that they've added to Enhanced STAR that we didn't have in previous years. So if your trust is 30 pages long, you have to attach all 30 pages. If your income tax return is 30 pages long, you got to attach all 30 pages. You're going to do a lot of copying. Death certificate, if you have had a spouse or an owner who died recently, attach a copy of the death certificate, not a raised seal copy, just an ordinary Xerox copy. None of these are original raised seal copies of documents, because you're not going to get them back. Copy of divorce or legal separation papers, yes, of course. And again, that could be lengthy. If you've already, again, submitted these papers in past years, you won't need to do it because you're being automatically renewed via your income tax return for Enhanced STAR. But if you have to reapply for Enhanced STAR because of a break in eligibility, then you'll need to resubmit all these attachments. Copy of probated will, we very rarely see that. That's when there's no new deed, like a mom dies, leaves the house to the son, and the son hadn't changed the deed over to his own name yet. So you have to have a copy of the probated will for that. But mostly people change the deed in those cases. Letter from a healthcare facility, that's only if you're in like a nursing home situation permanently, not temporarily. Power of attorney would be if you have a power of attorney acting for you. Next slide, page 6. This is where you're going to put in the adjusted gross income from your 2019 income tax return and minus your taxable IRA distribution. Now, that doesn't mean a 401k distribution, just an IRA distribution. And since it's only the taxable one, it would mean no Roth distribution subtractions. That becomes your enhanced star income number. That's the number they're going to judge versus the 90,550 cutoff. The address to mail to is on the bottom of the page at 240 Old Country Road. The deadline is January 4th, 2021, but don't submit at the very end. It gets very crowded. You're better off submitting earlier when they're not crazy busy. I think that's it for page 6. We can move on to page 7. First-time applicants, again, or re-applicants, if you had a break in eligibility, have to file the income verification form on page 7. That's RP 425 IVP. There's a couple of versions of this IVP out there. They all pretty much read the same. And you're giving permission again to the New York State income tax to verify your income. Page 8 is a little confusing. So I want to just point out where the confusion is so you don't mix up. If you can turn to page 8, there we go. On the bottom of page 8, you fill in your name and social security number, and then it says calculated income. That's your enhanced star income number from the back of the form. The tax year is 2019, of course. And then you fill in your federal and state return and your filing status so that they know what type of tax return you're filing or already filing. It pays, by the way, to get your return done in some sort of timely manner. Even with an extension to October 15, which is the IRS extension deadline, you want to get it done by then, because otherwise, when they check in your enhanced star eligibility in, let's say, December, they'll say, hey, there's no tax return yet. What is that? What's happening? So make sure you get your tax return done at least by the 6-month extension deadline of October 15. If they don't find a tax return for you, they'll send you a letter asking for all the information about your income. Page 9. The senior citizen property tax exemption. This is an additive discount. So in addition to basic star and enhanced star, we have senior star or senior citizen property tax exemption. Now you still have the same age rules as we had for enhanced star. No different, age 64 or more, one spouse. But this is an added discount. Basic star, usually about $1,200 discount. Enhanced star, maybe about $1,500 to $2,000 discount. Senior star, the third level, another $2,000 discount. These all are additive. All right. You take, in the case of the senior citizen discount, the definition of income is very different. So we're going to go through that here on this slide. And then we'll talk about the little box on the left. It'll make more sense after we talk about how you calculate your income. We're going to take all your income, and that would mean taxable and non-taxable income. So, for example, Social Security, we take 100% of your gross Social Security, not just the taxable part on your income tax. So that's different. than your income tax return definition of income. We take all your interest and dividends, capital gains, rental income, but we also take any pensions or annuities that you receive, but we don't take, the most common error is we subtract your IRA distributions and we add your IRA earnings. This is the area that has the most errors and the most rejects. So we're going to explain how you get your IRA earnings. They only appear on the December 2019 monthly IRA statement from your bank or broker. Right? And it's usually in a box on the first page or two that says something like income summary, and it'll list month to date and year to date interest, dividends, and reinvested capital gains if you have mutual funds. That's the number you need to put on the Senior Star application form. Do not put your distribution there. I don't even attach the 1099 about the distribution so that you don't confuse the auditor, because someone's going to audit all your paperwork and your papers might be 50 pages long of attachments. Gets to be a lot of paper. All right, so IRA annuities. We see these, and these are a little more confusing because an IRA annuity has an anniversary date. They don't have a December 31st monthly statement. Annuities send out an anniversary statement once a year on the anniversary date of when you originally got or purchased that annuity. And annuities can be IRA annuities or not IRA annuities. And the difference is the word qualified. A qualified annuity is probably an IRA annuity, or and again, it would show with the IRA box being checked on the 1099 about that annuity. If the IRA box is not checked on the 1099 form, it is not an IRA, it is a regular annuity. On the Senior Star, we also subtract all out-of-pocket medical, dental, and drug expenses. Enhanced Star, we don't do that. And this can be very sizable, thousands of dollars usually. So it's very important to try to document it, because if you don't have a piece of paper to prove your out-of-pocket medical, dental, or drug expense, then you don't get the benefit of it as a deduction from your income. So you have to gather a lot of paper again. Medical insurance premiums like your AARP supplementary premiums, drug plan premiums, drug co-pays, dentists, they're expensive. You need a statement from the dentist. You need the co-pays at the doctor's, and you can get a summary of your co-pays from the doctor's office usually for the year. The prior year now would be 2019's medical deductions. It's 2019's income and income tax, and it's the medical, dental, and drugs from 2019. You can also add in other items like hearing aids and eyeglasses, long-term care insurance, those other expensive items. All of those are subtractions from your income, and they help you get a larger Senior Star discount, which is that box on the left where they show you the percentage discount. The maximum percentage is 50% discount if your income is 20, if your net income, net of medical, net of IRA is 29,000 or less. Sometimes people have incomes of 45,000 and 10,000 worth of medicals expenses. Now their net income is 35,000, and they would be at the 15% discount level, which means they probably would save about $750, not maybe $2,000 on their school tax bill. Of course, people's percentages vary year to year depending on their income and their medical deductions. But it's very important that you document with a piece of paper all of these deductions as based on when you pay them. All right, so the net amount, the maximum income for the Senior Star discount is $37,400. It's the same for single or joint. Unfortunately, doesn't matter, single or joint. It has not changed in many, many years. It's the same 37,400. And that's the net number. And you can see on the bottom of the screen, that's when you would go to 0%. 0% discount. Okay. Another new thing that they added to the Senior Star this year, there's been a lot of things added. They added on the instructions that most people don't see that you want to attach a copy of your mortgage statement, your home equity loan statement, or your reverse mortgage statement, a recent one. Not sure why they want it, but they added it to the instructions on the website. So you might as well give it to them. And we didn't have time to get that in the presentation as an added item to attach. And it's not on the next page, which is page 10. So if you would forward on to page 10, when we look at the instructions, these most recent things like the mortgage statement copy are not on the form. They're not reminding you on the actual form to do this. So there are some instructions that I would say are sort of like hidden instructions. They're on another page on the website of instructions. So if you go to the county website, you'll see there's a form and then there's a page of instructions, and that's where you'll find it. Okay, page 10. Be very careful that you're using the correct year. We're now using the year 2021-22 because you're applying for the next property tax year. And it takes 1 year before you see the savings, meaning the reductions in your property tax in November 2021. Sometimes people get frustrated. They say, well, hey, my property tax didn't go down yet. Well, you have to wait a year. All right, the senior citizen or Senior Star, as I will call it to be simpler. Again, you put the names of the owners, the section, block, and lot. That part's the same. But you have to, they have a checkbook box to add a copy of the deed, a copy of the trust, if there is a trust. I try to highlight in the trust, if you can, where the life estate clause is. That's the sentence that says that the senior owner or grantor of the trust has the right to live in the house for their life. And because these trusts can get so many pages, it makes it easier for the auditor if you use a yellow highlighter and say, hey, here's where the life estate clause is. You don't have to pull your hair out trying to find it. All right, proof of age, same thing, the driver's license usually, although you can use other things like a passport or a birth certificate. Proof of residency, again, the tax return, because it's required. But you can use a social security statement for proof of residency. Make sure the addresses match, of course. That's what they're looking for. And then they have a few questions. Or, do you live at the property that's exempted? It has to be your principal residence, of course. Is there anybody not there because of divorce or separation? Because they're looking for maybe people that file separated but still live at the same address, because then they want to add the incomes of those two people together, even though only one of them is the owner, because they live at the same address. If you're in a healthcare facility, usually that means if you've been admitted to a nursing home, usually permanently. They want to know that because then the nursing homes become your principal residence then after that. List other addresses you own of real estate. We spoke of that before. A new one, list any businesses that you own. That's a new thing. They're very strict about that. So people who have a business, either a corporation business or a Schedule C sole proprietorship, unincorporated business, they give more scrutiny to those applications. They might ask for more proof. If it's a corporation, you better attach the entire corporate income tax return. They always will ask for that if you have a corporation. If you are a sole proprietorship, your Schedule C in your income tax return is usually enough to satisfy them about your proving your self-employment income. And I'll say your net income because people who are in business have allowable business deductions or expenses. Okay, now the next box says, who else lives with you? So usually it's just husband and wife, fine, that's great. But if there's adult children living with you or younger children, grandchildren living with you, other relatives living with you, unrelated people living with you, this is where you would put down their name and age. And if they contribute to the household or help with household expenses. The next sentence is about children that live in your home who go to school. And they're only interested if they attend public school, meaning elementary, middle school, or high school. They're not interested in private school or Catholic schools. They're not interested in colleges. The reason is that school tax only supports public schools. So they want to know, pre-K through grade 12. Are there anybody living at your house who's in school? The local school, you have to get a letter of attendance that says, hey, this child is attending I'll make it up, Levittown School. And the school district will then decide if they're going to extend the senior discount, the added discount, to people who have a child or grandchild using the public schools. The original assumption was that seniors didn't have children in public school, but that's not true in all cases anymore. Then, of course, the owners sign on the bottom. And we turn to the next page, which is not numbered properly. It should be page 12, but mine says page 1. So it's the one that's got the big grid about your different categories of income. Gross Social Security. That means before any reductions, no, go back to the page before. Thank you. Gross Social Security before any deductions. If for some reason you don't have an SSA 1099 because you lost it, it's issued every January, you can always call Social Security and ask for another one on an automated line. So it's easily replaced. The VA Veterans Disability Pension, that's a little different than income tax because income tax doesn't care about that. It doesn't tax it. It doesn't know about it. And the people who have a disability pension from the VA get a letter every year that says how much money they got from the VA. What will happen here is we'll put down, let's say they got $1,000 a month. We'll write down $12,000 for the year. And then later on, the Department of Assessment will remove the 12,000 as a deduction. And that is not something that you remove. You have to put down the gross amount and allow the Department of Assessment to remove it. I guess they'll just check that it truly is a disability VA pension. Salary or wages, you attach the W-2, and of course, these numbers need to match your income tax return. If they don't match, you better explain it in a separate note. IRA earnings, that will not match, of course, the income tax return, which has IRA distribution, and they remind you here, don't give us your distribution, give us the earnings, and attach the page of your bank or broker monthly statement that shows the IRA interest or dividends that your IRA grew by. Capital gains, if you have a Schedule D as in dog on your tax return, this is where you would put in any capital gains. If you had a loss, a capital loss, put it down with a negative. Pensions, annuities, and other retirement plans, those are 1099-R forms. This is where you would put down the taxable and non-taxable pensions. The one exception I find is annuity where you purchased an annuity, let's say at a bank with your own money, not retirement plan money. And that means that at the end of the, say, 7-year annuity expiration, they give you back your earnings, your IRA earnings, sorry, your annuity earnings, and they give you back your annuity principal, just like a CD maturing. In that case, you would only put down the annuity earnings. And I always then make a note on there, the rest of it is the return of my own principal, just like a CD maturing with interest and mostly your own principal being returned. Taxable and non-taxable interest and dividends. That would be bank interest, stock dividends, and tax-exempt interest or tax-exempt dividends from a tax-free mutual fund. That's what they mean. And again, you're attaching proof of all of these items in addition to the tax return matching it. Disability and workman's comp and unemployment. This is a tough one because unemployment, they don't send 1099 forms anymore in the state of New York. You would have to go to your unemployment account online and print your own statement about how much unemployment you received in 2019. So make sure you have your sign-in password for the unemployment website. Otherwise, you're going to have a hard time getting a 1099 form or a payment history form if you can't get a 1099, a payment history of from unemployment, but it still has to be printed from their website. So it's not so easy. They don't send them automatically anymore. And you can't reach them on the phone very well at unemployment either. Disability, workman's comp. Again, workman's comp is not on your income tax return. It's not taxable. You don't report it. So that's another difference. Here, the property tax counts all of your workman's comp. If you get, I don't know, $500 a week or $2,000 a month from workman's comp, that's what you're going to put down here on an annual basis. They do give a letter from workman's comp that says how much you receive, usually per week or per month. So that would be your proof to attach about how much your workman's comp is. Income from estates or trusts, that's very rare. But you would get a K-1 form, tax form, if you did have income from an estate or trust. business income for Schedule C, which would be a self-employed person, or a corporate tax return, as I mentioned, or a partnership return, which is a Schedule K1, that the taxable income would be reported on a K1 from a limited partnership. Rental income, Schedule E is an Edward on your tax return. And Schedule E has both your gross rental and your expenses. As a landlord, you have expenses for property tax and repairs and so forth. And so they only include here your net rental income from Schedule E. Other sources of income, and of course this can be many, alimony, which would appear on the tax return usually. Child support, not on the tax return. It's not taxable, but here you have to report child support that you receive, not what you pay, what you receive as income, or I'll call it phantom income because it's non-taxable income. Money from other people living in the house who contribute to the household expenses. This is where you would put in the $500 a month that your brother gives you for paying, household expenses. Gambling income that you receive would go in here as well. And then you add up all the income items, and we go on to the next page, 13. I'm sorry, I'm going to go back to 12 just a second. If you would go back to 12, I see something on the top I want to point out, where it says above the Social Security boxes about your income, it says Internal Revenue Service transcript order line. That's the wage and income transcript. The phone number on the actual form from the Department of Assessment is not correct. So I don't want you to be frustrated calling a bad number. You have to call the number that we've inserted here, and you would request Form 4506T from the IRS. And you have to get to a person to do it. So it may take a while to get to a person. And when you fill out that form, we're going to look at a form at the end. We'll show you that you have to check off that you want option number 8 on the form, so that you get the correct wage and income transcript and not something else. Also on this page, it reminds you to attach, right up on the very top of the page, to attach your federal and state tax returns in all pages of it, and proof of all the income items from 1099 forms. And if you are a first-time applicant for the Senior Star discount, or a reapplicant if you lost it and had to now get back on the Senior Star discount, you must attach a wage and income transcript. And that's because all knowledge of your prior history of Senior Star has been erased by the Department of Assessment computers. You now have to reapply and reprove that your income tax is correct. The income tax return that you attach. And the way they do that is by looking at the wage and income transcript from the IRS to make sure that that agrees with your income tax return for the same year, 2019. If you already are renewing your Senior Star discount on this form, then you do not need the wage and income transcript each year. Only the first year that you apply, or the first year you have to reapply because you lost eligibility the prior year. All right. Let's go to the next slide then. That's page 13. This is where you put your medical expenses. And of course, this is big numbers. A printout from your doctors or dentist showing all payments. Um, Most of the people I see attach lots of copay pages. It would be nice if you had a summary of it, but if you don't, then you're just going to have more papers showing all the different visits that you made to doctors and the $40 copay that you had each time or whatever it was. You can also attach a summary from your Medicare plan that would show all your copays for the year on your December explanation of benefits. That's another way that you could save some headaches and paperwork, because that would summarize your copays. The second item is your Medicare premium, which is on your Social Security 1099 form. Don't forget to include it here. It's $1,600 this year. Also, if you have, in addition to your Part B premium, Part B as in boy, you may have drug plan premiums or Medicare Advantage premiums on your Social Security statement. So include all of those on this line. In addition, add in any secondary insurance that you have, like AARP plans, your outside drug plan premiums, long-term care insurance premiums, dental insurance premiums, all of that stuff goes in there. And those are big numbers. A printout from your pharmacy. It's preferable than having all those little envelopes that you get from the pharmacy with your medicines, because it could be like 20 envelopes that you'd have to copy with all the individual copays. If you get a summary from the drugstore for the whole year, 2019 again, that will summarize all the medicines you got for the year, and your copay amount will then appear in one column, and they even add it up for you. So it's a heck of a lot easier. Letter from a healthcare facility stating a date of admission, again, would be if you were changing your residence like to a nursing home. We don't normally run into that. Where on the bottom here you see for assessor's use only, so don't touch that area. That's where the auditor is going to review and say that you're going to be approved or denied, or they need more information. That's where they remove the VA disability that we mentioned earlier. That was, I said, $1,000 a month as an example. That's where the assessor will do that, not you. Don't be shocked if they say, hey, you know, you're missing something, or we want more information. Just make sure that when you send it back or give it back to them in person, put your section, block, and lot on every page, because now they have to match up your extra pages to your original application. And the section, block, and lot will help them do that if they ask for more information. All right, on the bottom of the form, they give you the address again. When you mail in your form, and this year they would like you to mail it in because of COVID, they can't handle more than about 7 people in the room at the assessment department on the 4th floor because of social distancing. And of course, you have to wear a mask. So they said, hey, you know, please mail it to us, certified return receipt. You need proof that you turned it in. The assessment department is issuing postcards to confirm the receipt. But I would say certified return receipt anyway. It will cost you probably about $8 to $10, depending on how much it weighs. But it's worth thousands to you. And every year, I have 1 out of 100 people who come to me and say, I turned it in, I mailed it in. And the assessment department says, we don't have it, you lose. You lose your 2,000 discount. So don't be one of those 1% that they somehow managed to lose, or it never makes it there, the post office didn't deliver it, any one of those reasons. There is a box here that says to apply for senior citizens exemption for this property tax year, you must also file Form 467. If you're renewing, we don't need to do that. Form 467 is the senior citizen discount forms. It's the same form that we're looking at. Page 14. Is a copy of the extra instructions that are on the website, but they're not mailed to the people who receive renewal forms in the mail. All right, after you apply the first time for the senior citizen discount, you get a renewal form in the mail, usually in July every year, saying, hey, it's time to renew, tell us about your income and your medical, and you don't have to send us your deed. We have that on file because you gave that to us the original first time. So it saves you, having to reattach the deed each year. But everything else you have to attach. But and then when you go back here to page 14, this is the extra instructions. It's on the website for the Senior Star. So it goes through the same stuff that we just went through explaining. Page 15, it continues, these instructions continue on page 15. So it's 14 and 15, the Senior Star instructions from Nassau County Assessment. We've already talked about all of the items here. The IRS transcript required of all first-time applicants, or if you didn't file a tax return, you have to get a wage and income transcript to prove your income, or if you have a self-prepared paper return where you wrote the numbers in by hand. So I really try to urge you, not to have a handwritten tax return if possible, and to file a tax return so that you don't have to bother with the wage and income transcript, because it's hard to get, as we're going to see in a moment when we get to it. And the IRS likes to reject people for it, for any minimal reason possible. I even had it rejected because I had both blue and black ink on the same form. My pen ran out of ink. So if there's any little reason they can reject it, if you have a whiteout or a scratch out, they'll reject it. Or if they revise the form, as they do once a year, they'll reject the prior form. So be very careful with the wage and income transcript. And that's why I suggest that you try to avoid it on renewals by filing a computer printed tax return if possible. You can get those done for free in various places, hopefully in libraries and senior centers in the future. Page 16. Additional information available online. They give you the websites where you can get brochures that explain the same stuff we've been going through, and the actual application forms. Make sure that when you print it, because I had this problem, that you print these are 14-inch long pages. The enhanced and Senior Star are 14-inch, 8.5 by 14.5 by 14-inch paper. And when I printed it on my computer at office and home, it truncated off at 11 inches. The last 3 inches were lost. So make sure that when you get it, you get all 14 inches of the page. Otherwise, they're going to send this application back to you as, incomplete. You can also request, of course, a copy of the form from the Department of Assessment as well. Family and Children has the forms as well. Maybe JCC has the forms as well, if you have a problem printing the 14-inch page.
Yes, we're happy to help with printing as well through the JCC.
Good. And I did have that very problem originally, and I did ask them to correct it if they could at Department of Assessment, but I'm not sure if that's happened yet. Page 17. Form 4506T, infamous. It's a reminder, must be filled out perfectly. You can do a husband and a wife on a joint return on the same form. No erasures. Make sure you check off on the bottom. There's a little box that you have to say, yes, I agree, or attest, signature attesting. And then you have to sign it and date it and put your telephone number on it and mail it to that address in Kansas City. You can also fax it. If you do fax it, I suggest you mail it in addition, because you don't know if they received the fax in good order. It takes maybe 3 weeks to get it. I've been seeing lately 3 weeks because it's not as busy a time maybe of the year for the IRS. When you fill out the form, and we're going to go to the next page, 18. Where we see the top half of the form. So I'm gonna suggest for now that you make a note how to fill out this form properly. You're gonna put on box 1, 2, 3, and 4. Well, certainly 1, 2, and 3 you're gonna fill in with your name, social security number, joint name. Item 3, you repeat your name and address. And then item 4 would be if you recently changed addresses so that the IRS can verify, the address on a prior tax return. Box 5, you leave alone. Box 6, you want to write in 1040 because you're requesting a transcript of a 1040 and not those other tax forms which are for corporate taxes, business taxes. Box 6A, B, C, ignore. They're just going to make you make a mistake. You'll get the wrong transcript. You want to go down to number 8, which is on page 19. Option number 8 says Form W-2, 1099 series, and all this other stuff. That's where the wage and income transcript is. And there's a box on the left, on the right-hand side, and I can't see it at the moment, but there's a check-off box on the right. I check it off, and then I circle that number 8, just to make it clearer that I want the wage and income transcript and not some other stuff that the IRS will send you by mistake, like a printout of your tax return. That's not what you want. You want a wage and income transcript, which is different than your tax return. It's all the electronically reported income from your Social Security, pensions, IRAs, interest, banks, and it's one by one. If you sold 20 stocks, it'll show you each of the 20 stocks that you sold and how much money you got for it. So it's different than your tax return. Box number 9, you put 12/31/2019. You're requesting the wage and income transcript for the year 2019, but that's how you say it, 12/31/19. If you needed a prior year, you would put in an additional year, of course. But for this purpose, you only need 2019. And then you see on the bottom by your signature, that little box, signatory attests that they've read the form. Make sure you check the box, otherwise you will be rejected. I guarantee it. Um, okay, that's how you fill out this request form if you need it because you're a first timer or again, a reapplicant for the Senior Star first time. Or if you didn't file a tax return, an income tax return, you will need it. Okay, I think we've gone through all of the slides. At the end of the, do you want to bring up the other pages there, Alana or Crystal? There are some other pages that have like, websites and phone numbers on it for you. So if you have further questions, you can, give us a call or you send an email. But the goal of this presentation is to help you fill out the form yourself. We couldn't possibly answer thousands of questions with just one or two volunteers. So we hope that you have found this helpful so that you can do the form yourself. And if you do have a problem, let us know. Alana or Arnie, I'm going to turn it back to you at this point to see if you have any further things to add before we go to the Q&A.
Well, I'm going to turn it over to Alana now, and Alana, you're up to bat. Let's have.
Great. Well, we had actually reached out to Joe to do this presentation because we have people that we help within Plainview, Old Bethpage, and Syosset with completing these forms. So if you do live within Plainview, Old Bethpage, or Syosset, we do have social work staff members that can help you with this process and with gathering the paperwork that you need and so on and so forth. But we really wanted to offer this both for the seniors who live within our Newark areas, but also we always get calls from people who live in the broader community. And as Joe was saying, if people who are able to do it on their own can do it on their own, that's terrific. And if not, if you live within Plainview, Old Bethpage, and Syosset, we can help you directly. If you don't, we can help you find the corresponding organization that can potentially give you that assistance, whether it be through Family and Children's Association or through the agency that's contracted with New York State Office for the Aging for the to be the senior case management agency for that area. So we want to help link you up that if you do need that extra help to be able to get it. And I just want to thank Joe so much for doing this for all of us today. And my phone number is on here. Please feel free to give me a call if I can try to connect you to someone that can help you walk through that process. I do also want to let people know we're working with FCA again next week to do a program on the Medicare open enrollment period. So if anyone would like information on Medicare open enrollment and that webinar, please feel free to reach out. And actually, I think I will put my email into the chat as well, because that's another great way to reach out to me if people just want to get a link like that. But I see that there are a lot of questions building up in the chat, so I don't want to take any more time away from that. So let's go ahead and move forward with those.
If you just want
Alana, I have just a few things before we go to the chat questions that we
Sure.
didn't do in the presentation. I did want to just mention them. There is a low-income disabled discount that is the equivalent of the Senior Star. It's a separate form, but it just says if you're under 64 and on Social Security disability or workman comp disability, and your income is less than the $37,400, you can get that same Senior Star discount, even though you're not a senior. So that's important for that disabled community who are the homeowner. The other thing I want to make clear is that while we're doing all these income-based discounts, we do not do the grievances. I get loads of calls from people who say, I want to challenge the assessed value of my home. Can you do it for me for free? No, we are doing the income-based discounts. The law firms do it, of course, for a fee, or you can do it yourself if you can. But don't call us and say, can you grieve my taxes for me or fill out the form for me? No. And lastly, the most common error I see besides the IRA statement problem that I mentioned with IRA earnings is the surviving spouse problem. When they were two spouses alive, they got an enhanced star. One spouse dies, now they're eligible for this added senior star, but the surviving spouse doesn't know it and wasn't educated while they were both alive that they should do it. The one who died was the one who did all the tax stuff. So it's important to educate your spouse now that there is help when there's only one of you left. That was my additional comments. Thank you.
Okay. I'm going to read, I guess, some of the questions that are on the Q&A and the chat. The first one I see here says, if your senior spouse died, okay, so this is something I think, Joe, you just talked about. If your senior spouse died, can it still be applicable to the widow who is under age 65?
Boy, I'm not sure what the cutoff is there, but I don't think that I don't think there's going to apply in there. Like if you had let's say a 50-year-old wife surviving the 80-year-old husband who died, I don't recall that applying. That's a very good question. I guess I would try to ask that one myself. I seem to recall it. I thought there was something about 62, but certainly if there was a large disparity in age, it may not, that person may not apply. Part of that might be the decision on the surviving spouse if they change the deed. I would certainly recommend not changing the deed and only presenting a death certificate for the deceased spouse.
Well, usually when a husband and wife are on title together, Joe, and one spouse dies, there's no need to change the deed. By operation of law, it automatically, the house goes to the surviving spouse.
Right. But you have to attach the death certificate.
Of course. Yeah.
Here, at least. But it's a very good question. I will try to ask that because I have to ask questions in person like this when I go to Department of Assessment. So I will ask that one. Thank you.
Would the questioner want to put their email address to the panelists so that we can get back to you with that answer?
Yeah, that would be a good idea.
Okay.
Do that. Next question I have is, our 2019 federal tax return is being reviewed by the IRS, and we have not yet received our refund. Will this affect our first-time application for senior enhanced exemptions?
I don't believe so, because you're going to attach the copy of the tax return that you filed. That doesn't mean that it's been approved by IRS yet, or it's, it could be still under review. You may be still waiting for your tax return refund. I have people waiting 5 months for their refund so far, but they can still attach their tax return as filed.
Now, Joe, just getting back to the previous question, because I know we had some questions in my office. If a senior citizen was receiving the senior exemptions and passed away, this gets back to, so if the other spouse, the surviving spouse, is not 65, do they automatically lose the exemption? Or, how is that part of the question that you're still not really sure the answer of?
I'm not sure on the answer. I want to ask that question and we'll get back to them.
All right, so that's a good idea. So let's try to see if we can get an answer, because I have had some constituents who have contacted my office about that.
Okay.
Okay. What else we have here? Once the basic star is applied for, is it automatically renewed every year?
Yes. Basic Star you would normally apply for after you're living in the house for 1 year at usually a younger age. And then it continues as long as you live in that house. And sometimes can even be transferred to another house in the community.
Okay. What about, Joe, an estate that hasn't been officially settled yet in court, in probate court, or in surrogate's court? Is that considered to be a trust? Well, I guess it depends upon what the testamentary wishes are, correct?
Well, it would depend on, like you're saying that there's a deed, the person, the senior died or both seniors died, and let's say a son is supposedly going to inherit the home. I guess in that case, he would have to attach some sort of proof, of the deceased, that the parents died, and some proof that he's the likely inheritor, even though it may take months, in probate court.
Right, okay. I will be 65, this person writes, I will be 65 on January 4th, 2021. Would I apply at 64 would I apply at 64 for the 2019 exemption? I think that's what you had said in the beginning, correct?
Correct. They would apply now.
Right.
With the current form, they're eligible. The only case that would not be eligible right now here on September 30th would be if someone turns 64 on November 1st. They're not 64 yet. They have to apply after November 1st when they turn 64.
I just want to remind everyone that if there are questions that we've had, so far, one or two that Joe is going to get an answer, we will get back to you. I will email, if you email my office with your email address, I will get back to you on an answer. Can I hire my accountant to help me do this application?
I'm not quite sure. I mean, I have asked that question, and I guess you could, but someone at Department of Assessment told me a story. Don't know if this is true. Maybe you can find out, Arnie. This is a legal one. Years ago, when Basic Star first came out, some enterprising accountant said, hey, I'm going to charge for this Basic Star. And then the county said, we're going to pass a law that says you can't charge for doing Basic Star or any star. So I'm not sure that the accountants are allowed to make money. And maybe you can verify that one, Arnie, if that's, because that was kind of like a hearsay thing that someone at assessment mentioned to me.
Well, I think that's a great distinction, though, is if the accountant, is the accountant charging money for it? Is he just doing it in conjunction with,
Right.
Preparing the taxes for the taxpayer? And in
Right.
conjunction with doing that, he just also fills out this application for enhanced star.
Right.
I guess that's a distinction.
Certainly, if he does it with the income tax return, then yes, there wouldn't be any issue for him. Not an issue for the homeowner. The question would be, is the accountant violating any rules?
Correct. All right, we'll see if we can get an answer on that one too. I am a caregiver. Which star would I apply for?
Ooh, well, is the caregiver the homeowner? Is the first question. The caregiver may often be a relative. Let's say it's a mom and a daughter. Daughter's taking care of the mom in the home. I would hope that the home is in the name of the mom, maybe with a life estate, so that the daughter would inherit the home when mom dies. That's the way it would usually work. But while the mom is alive, it's going to be the mom is the owner, the mom's income would be the income reported. And oftentimes the daughter doesn't have much income of her own because she's busy being a full-time caretaker.
All right. Next question. This gentleman missed the beginning. I already have enhanced star from last year. Must I renew my application every year, or does it carry over automatically?
Well, it carries over, of course, automatically if you file an income tax return with New York State, or if you don't, they're going to send a letter asking for your income, but usually with a long delay. It takes them a while to catch up with all these people who are missing tax returns.
Okay.
But it does automatically renew. But again, if there's a break in eligibility, then you need to reapply for enhanced star.
If the property deed is in my father's name, but I only pay for the mortgage, will my father be able to get the senior citizen discount?
Yes, I believe, because they're going to say whose name is on the deed. I'm not sure if this son lives in the home or just helps out the dad, because it could be either. If he lives in the home and is paying the mortgage, that would be considered a contribution on the other income line, because he's paying, a significant part of household expenses. So that would probably be the proper place to put that mortgage assistance that the son is offering, is on that other income line.
But it's a
Would
title.
be the dad's. It still would be the dad's senior citizen discount.
Right. It's a title. It's a title holder that carries the day in terms of
Right.
qualifications. Right.
And we do see sons and daughters who help out, the parent with whatever expense it may be.
This is, I guess, the same person. Me and my father used to be both on the deed, but last month I took my name off of the deed. Does my father have to wait 12 months to apply for the senior citizen, or can he apply now?
I believe it can apply now, because it's the change in the deed, that he's mentioning. It's not a sale,
And it didn't
to a
affect
third
him,
party.
and
It's
he's
a
still-
minor change, let's say.
Mhm.
So normally I've been told that it would be approved right away. It is up to the assessor, though, from what I've been told by Albany, but usually the assessor would say that. And there's a spot on the senior citizen form this year that says, have there been any changes to your deed? And they would have to say, yes, there's been this minor change, but not a house sale, of course.
I see. Okay, I had enhanced star while living in Suffolk County. Then I moved to Nassau in August of 2019. Do I have to reapply for it with the mandatory income verification form?
I just had a case like this recently. What he did was he contacted the assessor in Nassau and Suffolk, in this case Suffolk, and said, hey, did you transfer my star status from my old home in Suffolk to my new home in Nassau? If they transferred it, then they're treating him like an older homeowner prior to 2015. If, on the other hand, they don't transfer his star status to the new home, then he would have to apply as a newer homeowner through Albany. And then he would get the rebate check and not the reduction on the school tax bill. So he really needs to check the assessor in Nassau, certainly at Nassau, that's the new one. And if then maybe in Suffolk as well, because it has to go from Suffolk to Nassau. That's what I've been told. It's a very, we don't get a lot of that, but that's the answer I'm getting.
Okay. This same person indicates that when she moved to Nassau in August of 2019, she had a regular deed, but then in April of 2020, she changed the deed into a living trust. When applying for the 2019 exemption, do I show the trust?
No, I think I had a case like this too. Well, I'm trying to remember now if they wanted the current ownership status or the status as of the year that, like 2019, which is the year that you have all your income and stuff for. I would go with the 2019 status. That an April 2020 change of deed is probably too recent for the assessor to have caught up with it. I was told that they look at it in January, so that might be, just too recent.
Okay.
So I would go with the 2019 status. But if she wants to be sure, she'd have to contact the assessor. Again, it's up to them to, assessor in Nassau County, to say that one. But
Now-
that's what I'm getting as in feedback when I ask that question.
Now, I think this relates to a previous question. I'm a caregiver. I am also entitled. My husband has MS and is disabled. So what kind of exemption do I apply for?
Well, meaning senior or disabled, the amounts are the same. I guess it depends on who's on the deed. If the disabled person is on the deed and they're age 60, let's say, you could apply for the disabled discount. Anybody on a disabled discount who hits age 64 should apply for the senior discount. It's just, fill out a different form, that's all.
Well, if it's a husband and wife and the husband is disabled.
Well, again, what's the age of the husband?
Right.
Is he under 64? Then I would go with the disabled discount.
Right.
When he turns 64, I would go with the senior discount. If the wife turns 64 first, I would go with the senior discount when she turns 64. I guess that's the best way I can explain it.
Okay. Now, if someone is no longer on the deed, they used to be on the deed with the father. I think this was previously asked, but they contribute to the household expenses. So then the father, I guess, in applying for it, would have to indicate what the contributions are.
Yes, in the other income line
Right.
on the senior form. Now, that's on the senior form. The enhanced star does not ask for contributions by a son or daughter. They only ask for the dad's income tax return. So there is that, difference there.
Right.
So they might say, yes, I'm eligible for the enhanced star, but maybe those contributions make you ineligible, meaning over income, for the senior star.
Two unmarried persons owning the home and the deed rather is in a revocable trust. Are both incomes added together to determine the income levels? What are the income levels for the basic star and enhanced star?
Well, basic star is $500,000, so we don't usually worry too much about that group. Enhanced star, we said, was 90,550. Two unmarried persons who are hopefully both on the deed, I would think, you definitely would be adding the incomes, and that would probably be two single tax returns that would be added together. If they married, then we would treat them as a joint return and, add their joint incomes together.
Okay. So I get again, this person is still a little confused. The one who's the caregiver for the husband who has MS and is disabled, if both of them are 64, well, then they both can apply at 64 for enhanced star.
Yes.
Or they could apply for the disabled.
They could apply, if they were on the disabled discount, I would say they would then apply for the enhanced and senior discount because they're both 64 or one of them 64. Because once you hit the senior category, the disabled category is no longer relevant.
Right.
And the amount of the discount is the same. But that way it will be simpler because they'll continue forever or for their lifetimes on the senior discount.
Okay. Okay.
It looks like we also have some questions in the Zoom webinar chat, in addition to the Q&A.
Go ahead.
I see here our 2019 federal return is being reviewed. Did I ask this?
Yeah, you asked that one before.
All right. Yes, I did. Okay.
They use it as is.
All right. In the past, we have had Basic Star. In 2019, my age and our reduced income made us eligible for Enhanced Star. 2 weeks ago, on September 16th, I talked to the state for instructions, and then I made the switch to the Star credit using their website for registration. Do I still need to enroll in the income verification program? And do I still need to apply to Nassau County for the Enhanced Star exemption?
Okay. They still need to enroll in the income verification because the state is now going to give them a rebate check, it sounds like, because they changed over from a school tax reduction to a rebate check, which will come in October from Albany. But Albany still has to verify their eligibility with the income verification form, signed. If at some date in the future they are eligible for the senior star at 37,400, if they're under that, then they would apply for that added discount through Mineola. Mineola handles senior star. Albany handles basic and enhanced star for the newer homeowners, for the newer homeowners, yeah, or the people who switched over like they did.
Okay. Do I need to obtain a transcript and send it if I'm sending a copy of my tax returns?
If you're a first-time applicant or reapplicant, as I said, when you get knocked off and go back on, then yes, you must attach a wage and income transcript. You will get rejected otherwise because they want to re-verify their income. And the easy way to remember it is to remember they wipe the blackboard clean, like in school. There's no knowledge of your prior star history.
If we didn't get back our refund for 2019 and the IRS didn't process it yet, how do we get the income and wage statement from the IRS?
You can still request it because that information on the wage and income transcript is not from your tax return. It's from the people who paid you money, your employer, your pension fund, your bank, your broker. That's who's reporting the numbers, the amounts. I did want to mention something important. On the wage and income transcript, unfortunately, because of identity theft, the IRS truncates information on the wage and income transcript that you receive in the mail to the last 4 digits of a tax ID number and the first 4 letters of a payer. So Social Security doesn't say Social Security paid you this amount. It says SOCI paid you. And you have to interpret and guess, unfortunately, who these names of the payers are. It's, again, the IRS, because of identity theft, they've been burned by, people stealing your information. So it is hard to read. is not numbered. The pages for the IRS transcript, which might be 6 pages long, they're not numbered. So staple it when you get it because the pages all look alike.
Our deed shows me as the owner and my sister as the surviving joint tenant with a right of survivorship.
Surviving joint tenant with right of survivorship. That's just like a husband and wife. So it's a brother sister.
Right. Or sister, sister.
Oh, sister, sister. Okay. If one sister is 64, they can apply for enhanced or senior star as they're eligible by income.
Right.
Yeah.
They're asking if they both have to show their income, or
If they both live in the house, they definitely have to show both incomes. And I have the other cases like this. One sister says, "No, I live in Queens," and the other sister, both sisters are on the deed. One sister lives in Nassau, one sister lives in Queens. I say, prove it. Give me some sort of proof that you can show the auditor in Nassau County that the other sister lives in Queens. Whether rental bill, property tax bill, a social security statement bill, anything that will show, because you have to be reasonable here. How does the auditor know that sister number 2 lives in Queens and that you only want to show sister number 1's income in Nassau?
Okay. Can I apply as a senior if my joint adjusted gross income is over $100,000, but the taxable income is less than $90,000 after subtraction of itemized deduction?
No, itemized deductions are after the adjusted gross, right? It's adjusted gross income, and that's before itemized deductions. But what we do have is somebody who says, I have an adjusted gross income of 100,000, but I had an IRA distribution of 20,000. My net enhanced star income is 80,000. That is eligible.
So the AGI is after you've already deducted the itemized deductions?
No,
Before,
no,
that's what I thought.
Before.
So then the itemized deductions don't count other than.
Right,
other than-
itemized deductions come after adjusted gross income
Okay.
on the tax return.
Well, on the tax return, but what about on the exemption forms?
It comes after here too, because your enhanced star is right from your tax return. The enhanced star definition is adjusted gross income minus IRA distribution.
And what about deductions?
No, there's no deductions, no itemized deductions, no standard deductions. Again, let's say my adjusted gross income was 100,000 and I had no IRA distribution and I had itemized deductions or standard deductions of 20,000. That person does not qualify.
Gotcha. Right. Got it. If you register to the state for the enhanced star credit, you're making the switch.
Right, to the rebate check.
Yes. Do you also have to apply to Nassau County for the enhanced star exemption?
Yes, if you've never applied for it, you would have to apply, yes. You're an older homeowner, he's saying, not a newer homeowner.
Right.
He's electing voluntarily to change from a school tax bill credit to a rebate check. That's his, voluntary right, but it can't go. Remember, he can't change back. But yes, he still has to apply for enhanced star if it's his first time of eligibility, and he would apply through Mineola, and he would attach the income verification form with it. Yes.
Okay. For the senior star exemption, does standard deductions count?
No. Standard deductions don't count. Itemized deductions don't count, except the medical part of your itemized. But again, you have to prove it with a document, each expense. The IRS doesn't ask you to prove everything with a piece of paper.
can you go over the life estate clause that you must have for a trust?
Yeah, we mentioned it, and it could be in the trust, it could be in the deed even in some cases, where they add a sentence that says that the party number, the homeowner, the senior homeowner, the grantor of the trust has the right to live in the house for their life, or 2 lives if it's joint. That's usually the way they express it, but it can be a sentence, it could be a small paragraph, but it could be anywhere in the trust. On the deed, it would usually appear on page 1.
My husband and I filed jointly. Would we be eligible to apply star to both, for both individually, or is it just one for both of us?
If you file a joint income tax, they're going to judge your eligibility by your joint income. If there are 2 people on the deed, you would put both names on the form. If only the husband is on the deed, then only the husband on the form, but both incomes on the income section and both medicals on the medical section.
Well, let's say if both of them qualify income-wise.
Well, no, I mean, they qualify jointly, you mean?
They qualify jointly, right?
Yes.
But let's say the reduction in taxes is, let's say, $1,500 for the year. I think the question is, does it become 3,000 if they both
No.
qualify?
No,
Right.
no, it's 1,500 in that case, or whatever percentage they get, right?
If my father gets SSI and he doesn't really file a tax return, I guess because of the income level.
Well, you don't report SSI because it's not a taxable income.
Correct, since there's no income. Does he have to file the tax return, or can I
Yes.
just use the transcripts?
I've had cases like this. Again, if it's a first timer, you can get you have to get a transcript, of course. Don't be surprised if SSI doesn't show on the transcript. I've had a few SSI recipients, and I have to attach their bank statement because the SSI is direct deposited to them from the federal and the state governments, by the way. They get it like maybe $800 federal and $100 state, and it only shows on their bank statement as a deposit. And that's the only proof we can offer. Unfortunately, it's not listed anywhere else, but they accept that.
If you go to page 8, slide 8, on the form for the income verification, just closing my chat, there's a place, if it says, it's asking you how your income is calculated. So it's asking you to check off the federal 1099, the New York State form, or there's a form RP-425 worksheet. And in the instructions, it indicates that if someone is not filing taxes, that they submit that worksheet that's for the enhanced STAR, is a calculation of their income.
Yes, that is an alternate form. Again, I think I mentioned that if you don't do a tax return, they will normally send you back a worksheet like this 425 saying, hey, we need your income information for 2019. It takes them a while to catch up with it, but they will send it out. I've seen them.
Yeah, and what I had run into with someone who didn't file was that they ended up having to get it as a credit rather than having to take it off of their taxes. So they had to pay the amount and get it back because
not good for cash flow.
Yeah, they hadn't submitted that worksheet form RP-425, and they waited for the state. Whereas then going forward, they just submitted the worksheet the next year preemptively so that they wait for it as a credit.
Okay, that sounds like it would work as an alternative for someone who doesn't want to file a tax return, but still wants to get enhanced star. But what do you do if they're like the people we're talking about here are often very low income? The senior star in Mineola doesn't say they want the worksheet. They say they want a tax return. So
Okay,
again,
here's
I
another.
think the tax return is better for that reason.
Joe, does a person listed on a deed as a tenant remainder man get included as an owner for income in the application?
I don't know. Maybe you can tell me, what's a tenant remainder man?
That's something that's left in a testamentary trust or a will. You're leaving a certain portion or a certain percentage of a property to someone they get the remainder of an estate.
Okay.
But
So they have a death interest in
correct.
the home.
That's what it sounds like to me.
So yeah, and that sounds to me like then, as long as the original senior is living, it's, you know, the senior is the owner, and the home is going to pass partially to the death interest person when the original owner dies.
Right, but during their lifetime, the tenant remainder man, his income would be irrelevant.
That's correct.
Right.
Unless he's a renter, let's say, and then the senior has
Paying-
rental income, maybe.
Correct. Right. I
That's a
understand.
possibility.
Right.
But I always caution them, people who are afraid to list the rental income. And I tell them, no, it's the net rental income, which is much lower than your gross rental income.
All right, here's a tough one, Joe. My
Okay.
mother is in her 90s, living at home, and has all of the star exemptions, even a small veterans exemption because my father was a veteran and died in 2011. The house is in an irrevocable trust that dissolves upon my mother's death, leaving the house co-owned by me and my brother. I am over 65 and plan to move into the house after she passes away. I presently live in New York City. My brother lives out of state and would remain in his own home out of New York.
Well, while the mother's alive, it's the mother's income that is, you know, going to make her eligible for enhanced and senior star. When the mother dies, the two brothers become the owners, right? One brother is saying he wants to live in the home as a principal residence. The other one sounds like he doesn't want to live in the home. So that means you have, again, the situation that I mentioned before, where they, the brother who lives in Nassau would have to have some proof that brother number two lives in another state. Just
Right.
like if you had two spouses who separate. I hear this a lot. Oh, I'm still married to the person, but they live in another state. And I say, okay, they're still on the deed, but prove they live in another state. Give the auditor a chance to understand that.
Right, but upon the death of the mother, all of the exemptions that are in effect, do they automatically are lost?
They will get lost soon as the government knows that the owner died. They usually rely on the brother here to tell them that the owner died and that they're going to change the deed. That's usually how they find out. So I don't know how fast that is.
But by general operations, when someone dies who was receiving all of these exemptions, those exemptions evaporate. They're extinguished. They're extinguished.
Yes, but again, how fast does the county realize that? Usually it would be when the brother says, oh, mom died, here's her death certificate. Right? The death certificate would be, a
Right.
clue.
Right.
Or a deed change or a probate thing.
Yeah.
It sounds like the questioner would, at least at some point, need to be reapplying again in her own name.
Correct. I agree with that. Yeah.
Mhm.
I think the issue becomes complex when a house is sold after the owner dies, and that owner was receiving all of the exemptions. There's what's called a restoration factor, and the county and the state go back to the date of death for the restoration of what the taxes should have been. And sometimes if you don't allocate or prepare for that, it ends up being on the new owner. So that has to be something that's taken care of, taken into account. I'm not seeing any more questions. We have a couple more minutes. If anyone has a question that they haven't asked yet, if you could type it into the Q&A or the chat, we'll give it another couple minutes. Otherwise, we are going to end the webinar. So
I have something to add that I didn't mention before.
good, go ahead, Joe.
Village forms.
Hmm.
Okay, we talked about Nassau County here, but many villages have similar senior discounts. For example, Lynbrook, Rockville Center, Freeport, Hempstead, Long Beach, Glen Cove, maybe others have a village tax, and they give a senior discount of up to 50% on that significant village tax. The amounts of money, the 37,400 cutoff, varies village to village. Each village votes their own income cutoff and how much medical deductions they may allow or none. But you should ask at your village level if you pay village tax. You should ask for the village senior discount form and file it. The deadlines vary a little bit. Most of them are December 31st, but Freeport is October 1st.
Hmm.
So they do vary some. So it's something that if you live in a village and you have a low income under 37,400, ask your village assessor.
I guess someone's interest got piqued when we talked about a couple seconds ago, the restoration of taxes when somebody dies, and someone asked, what is a restoration tax and how does that apply?
I'm not that familiar with that stuff.
Well,
That sounds like something that might possibly get treated maybe at closing if the closing lawyers are available, are aware of it. Like
I can
you know,
probably
the
comment.
prepaid property tax, you know, that would be affected maybe by it.
Yeah, I think there's no such thing as a restoration tax. What it means is that when a house is sold and the homeowner had been entitled to certain exemptions, and the new homeowner may not be, a young couple perhaps buying a house, the taxes that had been paid are going to go up when those exemptions are extinguished. So that's called a restoration. And I guess that has to be accounted for at closing.
Sounds correct, but I'm not personally familiar with it.
Yeah. Any other questions? Let's see. Do I see
And
anything?
it looks like we have several in the chat.
All right, I see here, I'm having a problem applying for Enhanced Star because I live in Country Point and I am not currently paying my full taxes yet because the builder is still building here. What do you suggest?
Is he saying that he lives in like a senior community that already has a tax break already?
I think what he means or she means is that because it is a new community, all of the property, all of the units haven't been assessed yet, so no one is paying the full tax yet. So the state is not allowing you to apply for an Enhanced Star yet.
Well, that makes sense if there's no, tax roll, yet because it's under construction. But that brings up the other point that there are buildings that are, not going to be eligible because they're already in a senior community that's already getting a discount for that community. You do have some situations like that where it's not a free market, condo situation, let's say.
Question for you, Joe. Can you restate when you can apply to Star for the first time? My son moved to Plainview a few months ago. does he have to wait 1 year from the time he moved in?
I believe for Basic Star, you have to wait 1 year. I don't recall that you have to wait 1 year for Enhanced or Senior Star, but you have to wait 1 year for a Basic Star, and usually when you are applying for Enhanced Star, he's a newer homeowner, so that means he's going to have to contact Albany, that 518 area code. I would suggest he contact Albany because he is a newer homeowner and say, hey, I want to apply for Basic and Enhanced Star as a newer homeowner from after 2015. And he can ask them right there, can he apply this year or does he have to wait till 2021?
Okay. For the Enhanced Star, is it the federal 1040 AGI or the New York State amount?
It's the federal AGI,
Right.
and your New York State tax return has a line number. I mean, I'm guessing it's like line 19 or 18. I think it's 19 that says federal AGI on it, because the state of New York makes you copy your information from the beginning of your federal return verbatim.
Mm-hmm. All right, I think we have time for one more question here. This is from the previous person regarding the house with the trust. The house, I will be eventually co-owning this house with my brother once the trust is dissolved upon my mother's death. What exemptions will I be able to obtain? My income will probably be less than $90,000 cut off, and I am over the age of 65.
Well, then he would be eligible for Enhanced Star again if the other brother is living somewhere else and they can demonstrate it, even though the two brothers are on the deed possibly.
And he would be considered a new applicant or a new homeowner because the co-owner.
Yeah, usually the assessor again would probably transfer this as a because it wasn't a home sale to a third party, right? It was still a related party from mom to sons. So again, the village the county assessor's office would probably, treat that as a minor, deed change, not a major third party sale deed change. He can verify that same thing, but that would mean that he wouldn't have to reapply that way through Albany.
Okay, I think that's all we have time for now. So I really want to take the time now to thank our panelists, Joe Mazur and Alana Rosenstein, for joining me. I want to thank you all who participated this evening. I would also like to thank Rick Lewis, the CEO of the Mid-Island Y JCC, and Dr. Jeffrey Reynolds, CEO of the Family and Children's Association, for making this evening's programming possible. If you haven't already done so, be sure to visit 2020census.gov and get counted. A copy of this presentation, including all documents referenced, a link to the recording, and a recap of the Q&A will be provided to anyone who registered. If you are watching on Facebook Live and wish to receive a copy of these materials, please email me at adrucker@nassaucountiny.gov. I want to thank you all and have a great evening.
Thanks a lot.
Thank you, Joe. Thank you,
so
Alana.
much.
Thank you, everybody.
Good night.
Good night.